Hello guys, I'm Paris the Options Guy and welcome to the No BS Trading Podcast, and this is the episode number 2 of the podcast. And this week was a very interesting one because the Fed disappointed the markets. FIIs have done a very big change to their position, so we are going to see what that change is. And next week is also going to be very interesting because the exit polls for the elections will start to come in from Saturday next week. So stay tuned till the end because I'm going to tell you what you can do in this time, how you can manage this election volatility, and all of the stuff in today's episode. So yeah guys, let's just start with the episode without any further delay. Now, this previous week was a very interesting week for the markets. We're starting off with Wednesday, where we saw the Fed minutes coming in and a lot of interesting things that the Fed officials said in it. Starting off with various officials mentioning raising rates if inflation warrants it. And I had said that if the inflation does not come down, I think the Fed will have to raise rates even right now. A lot of people think that we cannot see any sort of a rate hike in the market, but I think they might be wrong if inflation doesn't come down, because if the inflation doesn't come down, we can expect rate hikes. And I think that is also what the officials are mentioning in the Fed minutes. Officials have also mentioned in the Fed minutes. After that, the officials also said that they see a very disappointing inflation data in the first quarter of 2024. So yeah, and that is also what we saw, that inflation is not coming down that much. If you see the inflation numbers, inflation went down by just 0.1% in the last inflation data, from 3.5 to 3.4%. Not a very good inflation number, right? And more important is the super core and core inflation, which hasn't come down at all. Actually, super core inflation has gone up, which basically super core inflation includes only the very essential things, and a lot of things are excluded from those inflation numbers, which are normally included in the PCI inflation. So I, I think they are right with saying that the inflation numbers were very disappointing. And after that, they also said that if the inflation warrants it, they will also hold rates higher for longer. And that is what I think the market has also come to realize in the last few months, because in October last year, the market was pricing in 7 rate cuts. Understand that, 7 rate cuts. But now the market is only pricing in 1 rate cut, just one, from 7 to just 1 rate cuts. That means now people are coming to realize that rates might not go down that fast, and it's no point in expecting that they will. After that, if you see, some officials worry that financial conditions are not sufficiently restrictive. And I had said this in the previous week, that if the financial conditions were restrictive enough, why all the asset prices would not go and touch all-time high, right? But they still are. That means there is a lot of money in the market that is flowing into these assets, because of which they are hitting all-time highs every other week, right? Or maybe every other month. And so that is also something that the officials noted, and this is after a long while where they've touched on the point of financial conditions. And I think this is a very good thing if they keep a close eye on these financial conditions and start to restrict it, because then only I think the inflation can start to come under control in US. Talking about after that, some officials think long run rates need to be higher. And this is very important, because if you see, going back to the data, since I think after the global financial crisis, in the rates were held near 0% artificially for a very long time. So I think this is a very good thing, and a very fundamental change that is coming into the Fed, basically the Fed policy, that the long run rates need to be higher. And I think if these long run rates are kept at a higher rate, inflation, some spurts in inflation, like we saw in 2022, where inflation went near 9% or anything in the US, I think that will not happen. So this is a very good move, and I think definitely long run rates need to be higher, even if the market is disappointed, because the economy first needs to function well. You cannot just expect or hope for the markets to go up and the economy to crash down. That is not how things work. If at the end of the day the economy is not functioning well, it's not really there is no point in pumping the markets to all time high. Eventually you will see a crash in asset prices. So I think if they can bring a very sustainable policy of inflation where the rates are at a pretty high rate, which means the inflation will be down and the whole inflation will be under control, that is a very good thing. After that, many officials commented on the uncertainty about the degree of policy restrictiveness. So they are also sort of confused about where the policy should be, right? Should we cut rates, or should we bring more money into the market, or should we hold back more money? And why they are uncertain about the policy is because a lot of banks in the US are not doing great. A lot of people, and the Fed might also say that the economy is strong, blah blah blah, but a lot of banks in the US are sitting on a lot of unrealized losses. Keep that in mind, because they bought a lot of bonds when the rates were near 0%, and now the bond value has fallen down because the rates have gone up, right? So because of this, a lot of banks are sitting on a lot of unrealized loans, unrealized losses, and because of that, these guys are very uncertain on should we decrease the rates so that these guys can get away from their losses, or their losses can reduce, or if should we hold the rates higher for longer so that inflation comes under control. And because of that, I think the uncertainty is a bit understandable from the Fed side. So given the summary, I think definitely we cannot see any rate cuts at least this year, and I think that can be pretty certain, at least expecting where the inflation is going. And we are already halfway through the year, almost halfway through the year, and inflation is not coming down. Rather, inflation has started to go back up a little bit, but still inflation is not coming down, and that means the inflation is not ready to come down. So the rates are, I don't think, will also come down pretty fast. At least this year, I don't think there will be any rate cuts. And if not any rate cuts, we at least might see at max one rate cut, in my opinion. After that, maybe even rate hikes if inflation continues to increase. Now, keep this in mind that the Fed, it just because the market is pricing one rate cut doesn't mean that we will not see any rate hikes. If the market thinks that the rates are not sufficiently higher, and if the inflation continues to creep up in the coming few months, please keep in mind that there can also be rate hikes. Now, in the history of Fed, after such a long pause, the Fed has never hiked rates again. But I think uh, history not always repeats itself. There are sometimes events in the market in history which create new history and new sort of environments, right? So you cannot always expect that history will repeat itself. Sometime in the future, or basically right now, history will change, right? And some things will also change and not go according to history. So that was about the Fed minutes. Not talking about FIs. Last week, I had said that FIIs had their highest amount of short positions in index futures as of Thursday, right? And from that point onwards, these guys have completely changed their position. From going from minus 258,000 contracts in index futures, that is going from 258,000 short contracts in index futures, these guys are just down to 15,000 short contracts. 15,000. Keep that in mind, that this is a very, very, very big change, right? Moving more than 2 lakh short contracts is a very big change. And because of that, you saw such a good short covering in the market. If you see, Nifty went up 1.6%, I think, on Thursday. And that was, I think, solely because of this short covering that you saw in the market, where FIs went from 2,58,000 short to just 15,000 short. Now because of this change that I saw in the data, because I see the data every day, and I did see some short covering, and I have also taken some bullish positions for the elections, but I will not disclose it right now. I definitely will talk about that once the elections are over and I book my whatever profit or loss. Let's see how the election goes on. But yes, I think these guys are realizing that they are on the wrong side of the market, right? They're on the wrong side of what is about to happen in the elections, because if they knew something. As I had said that in the last week also, if they knew something that we don't know, they will act upon it. And I think these guys have now known that maybe they are wrong. Maybe they are wrong about BJP not coming into the maybe they are wrong about BJP coming into power with very less seats, right? I think they know that they know something that the election result could be very good for BJP, because of which they've covered their shots without seeing anything, right? The Dow was down so much. Dow hasn't performed really, but they didn't wait for anyone. They just started covering their shots every day, right? So I think they definitely know something, which might indicate that the results of elections can come out very good in the favor of BJP, right? But we will look at the data again in the next week, and I think next week also we are getting the exit polls, and because of which next week also I will be releasing the episode on Sunday, so that I can cover the exit polls at least of on Saturday, so that you guys can get some information about how to act and what you can expect from the election results, right? Anyways, one more thing that happened on Friday or on Thursday is that RBI released a massive dividend of 2.11 lakh crores to the government. Now, the government was expecting just 1 lakh crores of dividend, but they got 2.11 lakh crores of dividend, and this is extremely high. So now, how is this a good thing or a bad thing, and how can this affect the markets, right? One thing is that it is not a bad thing. If the government is getting more money, it is not a bad thing, it is actually a good thing. And one more thing that you need to see is that RBI is not stressing its balance sheets to give out such a big dividend. RBI has given this dividend in a very comfortable manner, right? They are not purposefully trying to increase the dividend amount or anything, and they've given this dividend in a very sort of, you can say, being in a very stable position. So this very good dividend amount can do two things for the market, which are both are good things. And first thing is greater government spending. If the government spends higher, right, now if the government has more money, it will definitely spend more, right? Because their fiscal deficit is coming down, so they have a higher sort of free hand to spend on things. So the government will start spending on infra or whatever. That means more money is coming into the economy, and this is a very good thing for the markets, because if the country will grow at a higher pace because of infrastructure development or any sort of investment that the government makes in the company, in the country, so that is very good for the market also. And because of this, you can say that a little bit of the very good up move that we saw in Nifty on Thursday can be attributed to this thing, right? Because people are also expecting that the government will spend more in the coming, you can say, in the coming years because of this. Now, not even in the coming years, but in just the coming months, because we have a new budget that is coming into the market, and that is coming in July. So government may announce more spending. And second thing is that we the normal people can also get some tax concessions because of this very good amount that they've gotten from the RBI. Now, how tax concessions? Because as I said, that if the government has less deficit, right, basically if they have some income, very big income coming from some source, they can give some relief to us, so that the income that they are generating from collecting tax from the common people, if that goes down, they can compensate it from these 2.11 lakh crores. And this again is a very good thing. Whenever there are tax cuts in the market, or tax cuts that the government announces, it is always good for the markets. So both of these things are very good for the markets, and because of that, you can say that the rally that we saw on Thursday can be attributed a little bit to this reason also. Now, these are all the things that happened this week. Let's go on to the next week and see what are the major things that can happen in the coming week. Now, next week we have only two major events, that are the US GDP data on Thursday, and then we also have the exit polls on Saturday. And those are the two major events. Aside from that, nothing much happening. Starting from the US GDP data, where last time the US GDP data came out very bad. The expectations were at 3.2%. The data came out at just 1.6%. So a very bad data last month. But we need to see, was that a one-off event, or does this time too the US GDP data comes out very bad? So we'll keep a close eye on this data, and next week we'll discuss about it. After that, we have the exit polls on Saturday. So keep in mind that because the exit polls are coming over the weekend, we will have a very big gap up or a gap down on Monday, or at least a very big move on Monday, on either side, depending on how the exit polls come out. So if you are taking any sort of a trade from a technical perspective, based on any technical reasoning, you see any sort of a pattern or whatever, book your profits or book your positions and stay blank for the weekend. If you are taking any sort of a election bet, right, betting on the results of the election, then that is a different thing, and then you can hold your positions. But if you are taking any sort of a bet from a technical perspective, just book all of your positions out and go blank for the weekend, because we will definitely see a very big gap up or a gap down on Monday, because on Saturday we get the exit poll, so everybody gets an idea of what the elections are, what the election results are going to come out, how the election results are going to come out, right? And exit polls are pretty close to election results, at least that's what I've seen from my own experience in the last election. But again, I've just only seen one election, so but still I think there will be a very big gap up or a gap down on Monday, so it's better to go blank on Friday in this week. Now, these are the two major events that are going to happen this week. Nothing much else happening after aside from these things. So let's move on to the IPO section. But there are no IPOs this week. We just have the office space IPOs, which again, on Monday it's the last day to apply. So same stance on the IPO as the last week. So go and listen to the last week's episode, because you'll get an idea of what is happening with the IPO, how the IPO is. But yeah, same stance, just the IPO premium has increased. Nothing much happening in the IPO space this week also. Now let's move on to the market analysis for the next week. Now this week, if you see, the markets went up very good, right? Bank Nifty moving up 1.6%, Nifty moving up 2%. So now it looks like we are in a buy on dip market, right? Where on in every dip you can think about taking a buying position, but keep in mind that we are nearing election results. Volatility will still be pretty high. So do not think that this will be a very easy thing to do, where you will buy anywhere in the dip and the market will continue to move up. This is not how things will go. Or maybe even we might see some sort of this an action like that if the FIIs start to go completely crazy and cover their shorts even more and start making long position. But still, it's better to take a buy on dip stance in this type of market, but keep in mind that the volatility will be higher. Talking about the weekly charts in Bank Nifty looking pretty good over here, right? It looks like Bank Nifty is ready for 50,000 also, and if we see this sort of bullishness continuing, then we can get a little bit of dip in the market, and then we can expect 50,000 also. Bank Nifty can easily come near 50,000 also in this week. And talking about Nifty is at 23,000. I think if we get a little bit of dip in at lower levels, then we can expect 23,200 also very easily in Nifty. Even more if the market continues to be very bullish. But I think in the first half of this week, you will definitely get some momentum on the upside. In the second half, we might see some volatility at higher levels, because then nobody would want to continue to make very aggressive positions on the long or on the short side as the election results come closer. So in the weekly charts, definitely a buy on dip stance. In the daily chart, if you see, Bank Nifty has just broken out right from this zone that I had said, which was very important. And if you see, Bank Nifty took a very good resistance from that zone also, but after that Bank Nifty has just broken out from that zone. So now any sort of that dip that we get near 48,500 to 48,600 area, that can be used as a very good place to take a buying position for 49,000 first of all, and then for a bigger target of 49,600, and then the ultimate target of even 59,000. But it would be best to book your profits by Wednesday at max, and then I think because on Thursday and Friday we can see some little bit of volatility coming in the market. And talking about Nifty, if you see 22,800 to 750, a very, very, very good area to take a buying position in the market. So if the market gives you one dip on Monday, and I think Monday is a pretty good day where we can see a little bit of dip in the market near 22,800 to 750 area, please do not get bearish all of a sudden just because we saw some dip, because at this point, the way FIIs are reducing their short positions, I don't think taking a bearish position will be very good. At least if we see some bad election results coming out, then we can think about taking bearish positions. But until then, what the price action is telling us is that don't take bearish positions. So near 22,750 to 800 is where you can go ahead and take a bullish position. If you see market taking support from there, making bullish price action in 15-minute chart, 5-minute chart, then you can think about taking a bullish position over there. Very, very good area in Nifty also. And Bank Nifty can also be much more bullish than Nifty, because now Bank Nifty has broken out, but Bank Nifty hasn't reached its all-time high. That means there are still short positions left in Bank Nifty which would not be as high as Nifty, because Nifty is already near its all-time high, so nobody is caring to take short positions in Nifty. And so Bank Nifty we can still have some short positions left, because of which we could see some more short covering. So in at lower levels, as I said, 48,600 to 500, very good area for Bank Nifty to take a long position in, and then from there we can expect higher targets in Bank Nifty also. So yeah guys, that is the stance for this week, but keep in mind that volatility will be on the higher side, so don't go completely crazy with any trade of yours in this week. And also at the end of this week, if you are trading, if you have any sort of technical trades which you've taken by doing technical analysis or anything, please square off those trades once before the closing on Friday, because on Saturday we have the exit polls, and if any sort of exit poll comes against you, right, against your position, then you will face an extremely big loss. You can face an extremely big loss if you sold an option and the market opens against you, because we will open with a possibly with a very big gap up or a gap down on Monday. But if you've bought an option, still, I mean, if you've bought an option with 100% of your total capital, then you can even face like almost 70-60% of your capital reduction in a single day. So any sort of aggressive position that you've taken on a technical basis, please square it off before Friday's closing. If you've taken a position regarding the elections or taken a bet regarding the election results, then it's fine to carry your positions. But even then, if you're taking an election bet, please make sure that your risk management is very much under control. Please do not go crazy and think that this is the only chance in the market to make big money, and so you need to take a very big position in the market. Because if you do so, and if just even if the market goes against you, right, just even if there is a small possibility and that happens, you will be in for a very bad time. But still, I hope you guys, I cannot come over there and close your positions or anything. It is up to you, but I hope you guys understand. And yeah, that was it for the market analysis for this week. Now let's move on to the concept that we are going to learn today. Now, the concept that we're going to learn today is known as dynamic risk to reward. Now, normal risk to reward means how much risk you are taking to get a potential reward, right? So let's say over here, I've taken this trade where I've taken this breakout trade at 560. I've taken this stock at 560 and my stop loss is at 540 with a target of 680. So this gives me a risk to reward of 1:6, right? That means for every 1 rupees that I'm risking, I'm taking a potential reward of 6 rupees. A very good trade. And this is normal risk to reward. Now, what dynamic risk to reward says is that as the market or as the trade goes in your favor, your risk to reward starts changing, because the potential downside that you have right? That the stock may come back down again, and the potential upside that you have left, that the stock can continue to go in your favor, changes. So I'm going to give you a very simple example over here of the what can happen in this trade. So over here, if you see, I've taken this trade at 560. Now let's say I've taken this trade at 560 and the trade continues to move in my direction and goes up till 620, right? And I trail my stop loss at 560. So when I do that, how does the risk to reward look like? So if I move this to, let's say, 620 and I move my stop loss to 560, because I've trailed my stop loss from 540 to 560 thinking that the market has gone up a lot. Now if you see, my risk to reward is just 1:1, right? Why? Because now I have a potential downside of almost 60, basically almost 60 rupees, and a potential upside also of only 60 rupees. That means my upside has gone down because already the stock has moved in my favor, and now there is less upside left in the stock, and my downside has increased because now if the stock comes down again, right? Now if the stock comes down, I will have to take basically less reward, right? So now my risk to reward has just become 1:1, which is bad, right? 1:1 reward is not really great. So now with dynamic risk to reward, now this is dynamic risk to reward because this is changing, right? With every, basically wherever the stock goes, the risk to reward keeps changing, because the reward that you can get, the extra reward that you can get, is it worth it for the extra risk now that you're going to take that the stock will come back down again? So now if the reward is 1:1, is it worth it to keep your whole quantity that you've taken in this trade? Let's say I've taken 100 shares, so is it worth it to still hold 100 shares on a 1:1 risk to reward basis? Now 1:6 risk to reward was a very good risk to reward that I was getting, and so I decided to take 100 shares. But 1:1 is not such a great risk to reward, right? So that's why dynamic risk to reward is important, is that it tells you that now it may be a good time to square off your positions, right? Now I've kept my stop loss at 560. Now let's say I move my stop loss to 600, because let's say I think that the stock should not come back down again to 600 if it is already at 620. Now my risk to reward is still at 1:2.6, right? In this scenario, in the second scenario where I've trailed my stop loss all the way to 600, my stop loss is still my risk to reward is still at 1:2.6, which is still a good risk to reward, because now my downside is very small, right? The stock goes down 20 rupees and I exit, right? So I have only a downside of 20 rupees, but still I have 60 rupees left on the upside. So this is a very good, still a very good trade, right? If I am getting 1:2.6 or 1:3, whatever, 1:3 risk to reward, right? A very good trade. So now I can still think about holding my complete position. But if I have a very big stop loss, still I have my stop loss at I have my stop loss at 562. My risk to reward is only 1:1, right? So with this dynamic concept of dynamic risk to reward, you can determine what is the right time to exit your trade or exit partial quantity of your trade or trail your stop loss, right? Because you have to understand that if the stock is at 620, right, now you have a lot of downside over here, right? Because if the stock comes back down again, you will lose your profits, right? So that's why dynamic risk to reward tells you where to book your profits and where to hold your trades. So I hope this concept is very clear to you guys, and definitely use this concept because it will really help you protect your profits if the market goes against you or starts coming against you. So yeah guys, that was it for this week, and I hope you guys liked this week's episode, and thank you very much for watching till the end. I really appreciate it. And I'll see you in the next week, because next week will be a very interesting week again, because we finally will get the exit polls and the election results. And next week again I'll release the video on the Sunday, release the episode on Sunday, because of the exit polls on Saturday, so that you can also get the analysis of those exit polls. But yes, that was it for this week. I hope you guys have a great week ahead, and bye bye. I'll see you in the next week.